The world's major oil producers meeting over the weekend in Doha. They're aiming to cement some type of agreement to keep a cap on oil production. Will they succeed? And the agreement is reached. How long will it last? Well, Malcolm Graham-Wood is from HydroCarbon Capital. This is one of the big things, isn't the fact you get all these people together, OPEC and non-OPEC, which I don't know when that last happened, but if they do come to an agreement, how long is it going to last? What are your thoughts as we go into this meeting?
Well, at the moment, the bulls are in the sort of hold the upper hand a little bit. I mean, the oil prices had a good run in the last few days. The market thinks they can make a deal and make it stick. But you're absolutely right. I mean, I think the biggest thing is that a deal will be, non-binding probably, and it'll be temporary. It might even be for approval at the June 3rd OPEC meeting. And the bottom line is that whenever this has happened before, they cheat.
Right. Let's get this straight. I think the market is only anticipating a freeze at current levels. That's right, isn't it? We're not expecting a cut.
Yes, and even the current levels thing is up for grabs because it originally was at January levels, and then the Russian oil minister, who's been sort of leading the way on this, said a couple of days ago that it was probably April levels, and so everyone's going to pick a level at which it suits them. It wouldn't do any harm. I mean, the point that I've made here before with you is that at the moment the problem is that there's just far too much stock around, and the supply and demand isn't working out. There's too much supply, and the demand hasn't pulled through. But that will change. And again, we've been talking about this sort of finessing the price up a little as we go towards the end of the year, because you do get a built-in demand increase of about 1.6 million barrels a year, whatever happens. You start to get a bit of growth, and the US is showing a little bit of that, and that'll add to that. And of course, with the price down as far as it is, production is falling. And we had an OPEC monthly review yesterday, and the IEA's brought it out this morning, and they've both said that by the end of the year, non-OPEC supply, in particular they mean the US shale, is actually falling faster than they thought. So we might find that we're in some much tighter situation, which we talked about here last time.
Okay, so the Saudis' plan is working then. I think that's presumably they're going to go back to say, well,
I mean, it's not in their interest to actually to have this too tight. I mean, the last thing they want is to get the oil price back up to 50 and bring back a lot of shale into the process. They want to punish the higher cost producers, and the longer that the oil price stays down, the longer they'll do that for. But actually, the situation is more interesting for the end of this year and next year, as we talked about. It's tightening up at the end of the year, and your point about Saudi Arabia and so on is interesting, because if we get a big increase in demand to go with that increase in 1.6 million barrels a day roughly towards the end of the year, the point that I've been making time and time again is that when this price collapsed, the first thing that happened was not a sort of standoff from anyone. It was the fact that the majors cut their capex budgets. Now, that's estimated at about $400 billion now. Now, those don't come in 6 months. They come in 18 months. Now, that will start to happen in 2017. So big projects which were due to bring oil into the marketplace in 17, 18 and 19 just aren't there, and you can't start them back up again. So what will happen is there will become a tightness in the supply and demand balance. If you get it to the stage where the market has managed to take the Iranian crude, which it may do, and that sort of it takes that in its path well enough, then what will happen is that you'll get a supply and demand back together again, and then all you need to do if you're Saudi Arabia is to take 500,000 barrels a day off the market, and you can control the price again.
So come next week when the meeting's over, what are you expecting the oil markets to do? We've seemingly built in a freeze agreement. What are your thoughts for where we go from here?
I think at the moment the risk is on the fact that the price will go up again, it'll go up more, and I think that's only because the market would like to see it happen. They'll probably put some sort of fairly good package together in terms of, the Russians are holding it at 10.8 or whatever, and it'll sound really good to begin with. So my guess is if you were to flip a coin, I'd say that I'll be a buyer of crude over that period of time, because I think, and we're talking a week, but I think after a little while, what people will say, stocks are still building up, and so-and-so are still producing. In the old days, when OPEC had quotas, the old-fashioned OPEC quotas, they cheated on them all the time. No one ever did it. And the point is that okay, this is a freeze at current levels in the hope that increased demand will make it work like that. Realistically, in the short term, the only way to get the price up properly would be to cut back production, and they ain't going to do that, because the only person who's going to do that is Saudi Arabia.
Yeah. Okay, look, we've got to leave it there, but thanks indeed for joining us. It's
Thank you.
Malcolm Granwood there from HydroCarbon Capital ahead of the all-important meeting in Doha at the weekend.